Excuse me. All right. I see. I don't like doing this during the day. One, everything's slower, and then the market's moving, so you can get distracted. Just because when days are red, we tend to think it's negative, but let's look at things from afar. So over the last nine years, we've gone up, which is promising. So what we see right here, we're pretty much range bound. Like in 2019, yes, we made it up to like the 90s, but since Corona in 2020, we're in the same range bound since when was this? 2013, basically. I mean, we peaked a little bit in 78, but even on the low, it didn't do anything. Besides, I mean, we branched out of the low, out of the range, touched back, looked like everything was gonna go great, but then in the end, we were literally the same spot we've been since for the last 7 years. So if you think this is gonna like jump up, no. But what makes sense is we're getting a dividend yield of about 6%. Institutional ownership 63%, which I mean it's a little low. I like it more around 80, but that's all right. All right. Now, since this is a real estate, why is it real estate? What this does is, I mean, you can read the article below, so I forgot. We won't go too far into it, but if you remember, well, we haven't got there. IIRP does the same thing, but it's for like the marijuana industry. What they do is they'll sell lease back. So if you're a huge company, you're a little bit cash strapped, what they'll do is they'll buy the company, buy the building from you, and then just lease the building, right? So in a sense, for a business, it's great, and for this company, it's great because you're getting the actual um, you're getting the actual property, right? So yes, you might be forking out $25 million in the beginning, but then don't forget you're gonna get interest on that $25 million you just bought the company for, and you have a tenant for 80 years or whatever. So it's literally just a short term solution for large institutions. Now the build the suit, that's kind of self-explanatory. They'll build the suit. Let me just go in a little bit. That was terrible. So what that means is that they will front you the money and help you with the building costs on one of their properties for a long-term investment. So instead of buying something from you, they will take one of their properties they already have, and or they're even buy the land if it suits WP Carey in that situation. And then what they'll do from there is they'll rent out the space that they just built for you. Mind you, they're not doing this with mom and pop stops. They're doing this with like extremely large companies that have to meet a very rigorous criteria in order for them to do this. So they have to know they're going to get their money back. So you can't just have the company, you can't just call them up and be like, hey, what I'm saying, build me up. It's not going to work that way. All right, this is the stock. You already know what we're looking for. We are looking for those beautiful dividend history, which dividend information. Oh, look at this. This is nice. Okay. Well, this is easier for us to look at, right? I mean, we won't go through all the quarters. We'll just go easily. Look at the years. Look how they've been going. Okay, from 2012 to 13, that was a nice little pop. But since then, I mean, slowly but get that out of the way. Sorry, slowly but surely, they've been raising their interest or raising their dividend, paying $4 a share right now, give or take. That's not bad at all. That's pretty good. And of course it's moving. So like over here you see 5.93, over here you see 606. So just bear it, it's kind of rotating or evolving rather. But yeah, the reinvestment. And so yeah, again, if you want to reinvest your shares that you've bought, they give you that opportunity. But yeah, other than that, I mean, I like this chart. It was quick and easy. It's very visual. We didn't have to scroll through a whole bunch to find it. Yeah, I mean, 1998 they were doing better than for a while, but that was almost before some people like 18 years old as an adult. So eight, that was a long time ago for most. So it's not as relevant as, let's say, even 2018 and above.